Attention A1 Trading Show fans. If you're looking to get funded, we've got a solution for you. Our partnered prop firm FX2 Funding helps traders get access to up to $200,000 in trading capital. FX2 Funding is not your average prop firm. We've chosen them as our partner because of their fair examination rules, their professional and available customer service, and they have an outstanding reputation in the prop firm space. Here's a quick look at their evaluation process. First, they don't have a time limit on their evaluations. That means that you can take your time when passing your evaluation. There's no pressure to rush your trading. Second, there is only one phase to pass in their evaluation before getting access to your funded account. Also, their evaluation fees are fairly priced and fully refundable upon passing. Once you're funded, you'll be able to keep up to 85% of your trading profits. Finally, a rule we know swing traders will love: you can hold your positions over the weekend. For a limited time, get 15% off any of their account challenges with promo code A1Trading15. That's 15% off any account challenge with code A1Trading15. If you're ready to get funded, we're dropping a link in the chat right now, and you can also find it in the description down below. So go ahead and get signed up today for 15% off with promo code A1Trading15. Now, back to the show.
All right, guys, welcome back to another live stream. We are here joined with James, who is, as always, here for reporting the news. James, how are you, man?
I'm good. How are you?
I'm good. How was that movie?
Yeah, so like some of the other people in the office, we went and saw the illustrious Oppenheimer movie. The big battle between Oppenheimer and Barbie has begun. And so I enjoyed it. It's very long, but it was entertaining the whole time. Little confusing, a lot of characters, a lot of historical stuff going on, a lot of stuff going on in the background. But I really enjoyed it. I thought it was good.
Yep, I saw it as well. I thought it was awesome. It was like you said, it's a lengthy one, but I'm a history nerd, so I really enjoyed it. I thought it was cool. So I hope everybody in the audience who saw one of the two movies enjoyed their weekend. If you didn't see them, I haven't seen Barbie, but I've seen Oppenheimer. I thought it was awesome. Definitely recommend it.
Whole office is going on Thursday. A little office outing.
Yep, that's right. So catch me in pink on Thursday. Yep. Anyways, James, we had a big start to the morning here. What are we looking at? Catch us up to speed as markets get started here.
Yeah, I won't take up too much of everybody's time because I know that we have PMI numbers here happening in just under 10 minutes. We already had all of our other PMI numbers come in for the day, but U.S. Flash Manufacturing and Flash Services PMI is coming up next. That'll happen here. We've got our little countdown timer just under 8 minutes now. Tuesday, we do have CD consumer confidence as well as the Australian CPI rate that is not going to release until 9:30 p.m. over here on the East Coast. So unfortunately, we cannot stream for that, but those numbers are happening Tuesday as well. FOMC, though, is Wednesday. That is going to be the big one. We have FOMC, the United States interest rate decision, is going to release at 2 p.m. In the afternoon here on the East Coast of the United States. FOMC is going to be the biggest thing happening this week, forecasted to raise interest rates by 25 basis points up to 5.5%. We'll see if that happens. I know that the inflation rate here in the U.S. has been following pretty consistently along with these interest rate decisions. We are now at, I believe, 3%. So we are real close to hitting that the Fed's goal of that long-term 2% inflation. We'll see if they do decide to go with the 25 basis point rate hike, or perhaps no rate hike at all, and we stay at 5.25%. And see if inflation continues to lower there without having to raise interest rates again. That'll be a big news event. And then really quickly, Thursday and Friday, we also have the Eurozone monetary policy statement, their new interest rate decision releasing as well, also expected to raise 25 basis points up to 4.25%. And we also have Japan's interest rate decision happening Thursday as well. And finally, Friday, we are going to have Canadian GDP numbers along with core PCE price index and the employee cost index happening at 8:30, with the revised University of Michigan consumer sentiment happening at 10 a.m. as well. So pretty packed news week this week, but the big event happening, of course, on Wednesday with that new FOMC decision.
Yep, definitely a very, very busy week. And of course, we will be here covering the whole week. Guys, we're about 5-6 minutes out from this manufacturing and services PMI number. So, James, thank you for that. I'll let you go so we can get into some charts here before the market starts kicking off.
Sure, of course. Thank you.
Thanks, James. All right, guys. So we're going to come back to, of course, the PMI numbers here in just a second. We'll have it pulled up. I just want to go quickly over reacting to what happened in Europe here, Europe and the UK prior to, of course, today's US numbers. We saw the French and German manufacturing and services numbers come out, and you can see it's a pretty clean sweep. All across the board, we see red. This is, of course, showing that in terms of economic activity there, right? Services PMI, manufacturing PMI, we're seeing some decline, right? All of these numbers being in red is one thing, but also the way this is measured is a contraction is under 50. And so what we could see here is, for example, above 50 indicates industry expansion, and below, of course, represents contraction. So we've seen some economic slowdown, and we see that reflected in the price action here today when taking a look at the pound USD, the pound making a move lower and, continuing to bleed off some of those gains that it has had recently. I think if you're marking your charts on the pound, I've got the 1 hour chart pulled up and I'm zoomed in here. For day traders, here's the thing. I think rallies on the pound do not look very promising right now. Short term, I think the pound is controlled by sellers. One of the big reasons I would say that from a fundamental, but also a technical perspective, fundamentals, we had big CPI numbers that were a total less than expected last week. It showed inflation moving in the right direction for the UK. And so that red hot pound USD kind of gave way to some weakness there. And I think that weakness story is here for the time being. I personally, when it comes to the pound, I think that against the USD could be very interesting, but I'm not necessarily a dollar bear either. So when it comes to GU, right, I'm kind of bearish on the dollar, but also bearish short term on the pound. So I don't really actually see myself trading this pair very much. When talking about this, of course, what actually could be kind of interesting is to take a look at other currency pairs, specifically the pound. But in the meantime, for those of you guys, I know a lot of the audience pays a lot of attention to pound dollar, right? Pound dollar trading lower. And I would say rallies on this for the short term look like selling opportunities. And the EDGEFINDER would actually agree with me on that one. It is listed as a sell here, getting a lot of negatives in the economic numbers figures, as well as seasonal trends expected to decline the rest of July, as well as retail sentiment. Crowd is very long on pound USD right now. I can show you guys that when we pull up retail sentiment here this morning, the pound is very much 66% of retail traders are now on the long side. Okay, so why does that matter? If the pound has a lot of long side from retail traders, that to us is a bearish signal. Just like with the euro, retail traders are getting into the sell territory, we're going to be slightly more on the bullish side, right? So this is one indicator that we pay close attention to that doesn't have anything to do with price action on the chart. So we do use technical analysis all the time on these streams, but it is not the only thing. But of course, speaking on technical analysis, what we see here is on the hourly chart, we have lower lows and lower highs coming into this market. So I would say pound USD looks pretty bearish on retracements. Of course, we are 2 minutes out from some market moving data. Let's talk about the dollar here for a second. Dollar on the 4 hour chart looking really interesting. Coming back, actually, this is a daily chart that I marked up on my Sunday video yesterday. We are now retesting a really big level of resistance, and it's going to be very intriguing to see how this plays out. I believe this is a 38.2% retracement from swing high to swing low. And there it is. As we see on this daily chart candle, the dollar is testing a key level of resistance. This news that we're about to get in about a minute and a half might give us a little bit more of a clear direction. If this rejects very hard, you may see lower time frames take advantage of sell side opportunities for the remainder of the day. But if we break out, I think we have room to go all the way up to the 61.8% retracement. So let's quickly mark that chart. as resistance here. If this level breaks, day traders might have a hold of it for today. We've got 1 minute to go here, guys. I'm going to go ahead and set up my charts so that we can watch the reaction to this PMI numbers to see if there's any market moving news. As we get into this, do me a quick favor, hit that thumbs up button while I set up the chart. If you would, guys, it does just to support the stream. It gets more people watching, and I do appreciate it. We've got dollar top left. We've got gold bottom left. We're going to put the Euro USD here in the top right, just because this, as well as the pound USD, both had a lot of news this morning. So 15-minute, let's make our 15-minute charts around the room. So we have dollar, gold, euro, and pound on the screen, guys. We are going to be covering all of these things as the stream gets going, but I want to make sure we get a raw reaction to, of course, the PMI numbers here out of the United States that we're getting in about 30 seconds here or less. So, of course, PMI numbers could move the markets. They also could not move the markets. We're just going to see if the number is surprising, markets could move a lot. If it's not surprising, it might not move at all. We don't know the news. We're here reacting to it, and we're going to trade the aftermath. That's what we're here to do. And let's get our breaking news. All right, and we are in here. The news, gold making a little bit of a move downwards, perhaps suggesting some economic strength out of the United States. Dollar making an initial move higher. And in just a second, I'll go read out the numbers to you guys. We'll take a look at those. Gold shot down, but gave back those returns very, very quickly. So let's take a look here and see what numbers are looking like on the still pending here. All right, there it is. One was good, one was bad. That would explain why the reaction was kind of mixed. Actually, manufacturing PMI numbers coming out slightly better than expected here at 49 compared to 46.1. And flash services PMI coming out at 52.4 compared to the 54 number that was expected. So a little bit of disappointment, a little bit of positive. This, again, would, in my opinion, consult for sort of a mixed reaction. And that's what we're getting. We saw a pop in the dollar, and then it gave back. Kind of a so-so reaction. And again, I think in this case, the market turns his attention very quickly to this doesn't change anything drastically for the meeting coming up on Wednesday. That's probably where we continue to see the markets trade. And yeah, so let's go back to this chart off the daily. I'm sorry, off the 4-hour chart that we discussed on the dollar. Again, we're seeing some reaction here. The steam that was pumped into the dollar here prior to this move, again, I'm taking this reaction as not necessarily super bullish for the dollar. We're seeing a little bit of mixed feedback there. The Fed is expected to hike on Wednesday, but from there, the question is, do they rate hike again? Many forecasts, analysts, bank groups, things like that, they don't expect the Fed to raise again. So should be interesting. Anyways, again, retesting resistance here for the daily chart off the dollar. I mentioned that if this level breaks, if we get a strong break, we probably, in my opinion, would trade up to the 618, right, as a deeper retracement. But where we currently sit, I think we do have a good chance of seeing a reaction to this 38.2% retracement. That is why, personally, I am long gold. And again, gold hit the 61.8% retracement off of my level on the 4-hour chart. I am long gold as of the 618. So I picked it up on Friday, actually. Let me see if I can show you guys this on my GLD trade. So I'm up a whopping $42. So nothing crazy by any means, about break even on this trade. But again, this is my trade that I took last week. And again, we are basically break even. So it hasn't moved very much. I am looking to see if this trend wants to continue. I'm bullish on gold. It is on the EDGEFINDER as a possible buy this week. And again, you can see it is getting a strong buy reading, a +6 reading. COT shows institutional money is very bullish right now. Seasonal trends, bullish, trend to the upside. GDP numbers and inflation both giving us a nice bullish push. Unemployment still very, employment in the U.S. very strong. So that's kind of hurting our case for gold. But overall, we still get a +6. The scoring here, the algorithm here is designed by myself and Frank. We're both the designers behind the scenes on this software that you're seeing on the screen. And I should say, if you guys are interested in getting access to this, we do have free trials available, tours available. We're going to drop a link in the chat right now if you would like more information about how you can test out the software. We showed the retail sentiment tab. In just a bit here, we're going to take a look at some COT data with Frank briefly, and then we've got Ivan to go over some trade setups as well. Ivan, I see you in the back room. I'm sorry. I think I misspoke. This is why I'm not the producer. If you could just hold off for like 5 minutes, we'll just give Frank a chance to go over the COT. We do it every Monday. In the meantime, we'll bring in Frank here to go over that, and then we'll go to Ivan just after that. So we'll say hello to Frank. We take a look at the smart money tracker here, and then after that, we'll bring in Ivan. So we'll go to Frank right now. We won't run an ad. So hey Frank, what's up?
Hey, how's it going?
Pretty good, Frank. COT, give us the Monday rundown. Big move on gold, huh? Did you see that?
Yeah, lots of longs added on the commodities side. So gold and oil look pretty bullish here. You can see a change in both longs to the upside, and then both shorts are also decreasing. So overall, pretty bullish bias for last Friday's report, but indices not looking as promising as before. So kind of holding off on any trades. Volume looks like it's dwindling a little bit. Unsure markets because of the Fed decision. It's pretty much expected that they're going to rate hike. So
right.
Yeah, not a lot of bullishness or any kind of activity going on this week. But actually the S&P is selling off pretty hard. They had some additions in the longs, but also an incredible amount of shorts picked up on the S&P. So nothing promising. I would say the indices would actually be bearish this week, or at least up until the interest rate decision. So yeah, I'm looking at gold. I'm in a gold trade right now.
Same.
I might look at oil soon, but oil kind of took off. But yeah, overall, just looking at commodities.
Yeah, no, and that's a fair point. I mean, this is why we do this each week, guys. We go over the COT report with Frank. He comes on and we do a little bit of analysis together on that. I should say also, this point that we're talking about, the long and short change that you see here, this is the COT report. If you guys are new to the streams, the COT data gives us an idea of what hedge funds and institutional money is basically buying and selling. It's a week-to-week report, and in the streams, we go over them all the time. So as Frank mentioned, essentially gold had a big increase in longs and a decrease in shorts. That's incredibly bullish. So we see gold, really big interest from institutional money this past week. It puts us at just under a 79% long ratio, which is a tremendous, bias to the upside for institutional money. Oil, also very interesting, 70%. Big decrease in shorts, big increase in longs, as Frank is mentioning. So commodities look hot, and the indices look a little less attractive here as we go into this week, which I think is probably fair, Frank. What do you think? Like probably NASDAQ and S&P, they probably have more room to pull back. Would you say so? I mean, I've got my chart marked up down at this like 15,200.
I definitely think so. NASDAQ specifically, I have this trend line drawn on like the 1 day, which is also a double top, so it could be good support, but this is around 15,200, 15,300. If we can see a further pullback to there, I'd probably be more comfortable in maybe taking a long there, but we'd have to wait and see because earnings is coming out still. The Fed news, just a lot of stuff. So we'll have to see some confirmation on the technical side too, like maybe a reversal or a hammer, whatever you want to call it, just some pressure to the upside so we can get an idea that maybe price wants to turn around, but who knows?
Yeah, no, I think that's a fair play, Frank. I mean, it sounds like you, Frank and I have been trading for a number of years. It's no wonder that we end up kind of finding similar trades sometimes. We do have different things that we trade. Frank sometimes gets more into some of the currency pairs, things like that. But we oftentimes find ourselves finding similar levels. So Frank and I are both looking at NASDAQ at deeper pullbacks. Frank mentioned perhaps waiting for some confirmation. I like this level, so I'll watch out for it. But yeah, thank you, Frank, for the rundown on the COT reports. Again, we do this every week with Frank on Monday. He walks through us the latest COT data to give us an idea of what institutional money is up to. Frank, thanks for coming on, man. And we're going to bring in Ivan here. So we'll catch you next time.
See you. Thank you.
All right. So we are going to bring in Ivan in just a moment. We're going to run a quick ad to thank our sponsors. We got to do that to thank the show. And we'll be right back with Ivan to go over some trade setups here following this PMI numbers. So stick around with us. We'll be right back with Ivan and we'll ask him about what he's looking at. Check it out.
Attention A1 Trading Show fans. If you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, guys, welcome back. And Ivan, thank you for your patience and getting on the stream. We waited the best for last. So how are you, sir? Wait, I think you're muted. Yeah, we can't hear you. At least I can't hear you. Oh, I can hear you now. How are you, sir?
Good. Okay, good. Yeah.
How's it going, Ivan? And again, thanks for your patience. This is why I'm not the producer anymore. I just show up and dance and sing. So, what's on your watch list here today? What'd you say?
Like, I'm also just here showing up whenever I'm supposed to be doing, but I thought it was supposed to be an hour ago. But anywho, I'm hoping for and I'm praying for to the forex gods that euro dollar is going to make a new higher high today.
Okay.
Not happening at the moment, but so I'm dollar bearish because I pray that Jeremy Powell is going to say, well, we're acknowledging the lower CPI, and that they're going to say that, well, we're not going to have so much inflation and we're not going to have so much interest rates coming throughout the year or even next year. So I hope for a dovish Fed on Wednesday. So that's what I'm hoping for.
Fair enough. Yeah, no, I think it's going to be an interesting report on Wednesday. As usual, by the time reports roll around, guys, the question of whether or not the Fed is going to raise rates pretty much for the last 2 years, every time they say they're going to do something in terms of a rate decision, they do it. But what's more interesting to the market, as Ivan's pointing out, is their commentary going forward. Is Jerome Powell going to make mention of a CPI progress being made that could hint to the next meeting showing signs of, okay, well, are they going to pause or they're perhaps done completely with their rate hikes? These signals could be very bullish for things like the indices. As Ivan mentioned, the euro could appreciate very well in that situation. So Ivan, walk us through the game plan with the euro this week. Let's say you get a breakout here higher. How would you trade it?
Oh, it's easy peasy lemon squeezy. So what I want to see is I just want a candle close above the previous high, which was made this morning at 10 a.m. my time at least. And then just a pullback. So either up to 1170 or 112 and then a pullback. So I just need a candle closes above. So right now we are way far away from it. And then when it comes back down, either use limit order or I actually just click the button, but I would probably do a limit order and that will probably happen by tomorrow morning, London Open. Hopefully.
Okay, fair enough. Yeah, I mean, I like that as well. And I think, I also want to ask you there, Ivan, you've got euro dollar pulled up. What about pound dollar? Pound dollar had some interesting data come out of it, right? We had CPI, really cool. What's your thought on pound dollar? Are you still bullish on this one, despite some of the recent changes?
Well, yeah. So much hasn't happened as of this morning, even though the PMIs came out and really crushed it. So it still is being priced in higher interest rate. But for me, it is all about the dollar weakness that would lead to pound strength and euro strength. So it's kind of like a two-headed thing. And then now with the short-term volatility being to the downside, I'll just keep waiting. But nothing changed. It doesn't change me overall. But it might change the market. But for me, I'm still waiting for the bullishness.
Okay, fair enough. And what about what else are you looking at? So there's a couple dollar crosses. You looking at any yen pairs still?
Yeah, I think I nailed this one pretty hard.
Very
I
nice.
got out.
You're all out of that
I
trade?
got out at
Nice.
158.
Good deal. That's awesome.
So I'm just waiting for a Russell bullishly to go back up again. I know that seasonality-wise, it's not supposed to be so great, and then PMI came out this morning. It wasn't really great at all. So I understand. And then was it Bank of Japan or Ministry of Finance in Japan said that they're going to increase their inflation target for this year. That also made the yen strengthening. So it's kind of like short-term volatility, send it down, but I'm waiting like a hawk. I'm just waiting for this one to turn around and go back up again. I'm going to follow it like I don't know, something.
Yeah. You've been trading that euro yen real well recently. So tell us about for people who may be newer to the streams. You've got your Wayne's pivot targets there. What got you out at that? So tell us about that green zone that you just had up where you took profits. What's the logic there for people who are newer to the streams?
So this is pretty simple and difficult. It is basically based upon the high and the low and the close price of the previous period divided by 3. So it's like an average. So basically, it is future support and resistance. And when you go to like weekly targets and monthly targets, it respects it pretty well. I mean, last week was of course great as it came up to that price of 157.90 and then dropped back down again. That is not very common, but I use these targets pretty religiously because when I do not take profit when it hits this first box, this first price of this box, is that it just falls and I lose profits. So this is what happened again. And then other times it does go through it, but that's kind of like outliers. So for me, this is my way to get exit or out of a trade, or the same thing with stop loss. So for me, it's just, and also everyone can see it's just a previous coming back up to the previous high. So you can use price action. I just use pivot points because it makes it easier for me. So I don't need to do a lot of thinking.
Fair enough. Hey, Ivan, I spoke on a panel this weekend on a traders panel that 8cap put together on AI and just like how AI it could potentially be trading the trading industry in some way. And a lot of guests that came on, I really appreciated listening to just the indicators and selections that they made, because a recurring theme throughout the day was like, everybody has busy lives. So if there's anything that you can do to make your process more robotic and less time consuming, it's worthwhile. So that's why I ask. And again, if you could make anything easier for yourself as a trader to spend less time on, it is kind of the goal. So thanks for sharing. For anybody who in the audience would like to look those things up, you can find them on TradingView. And also, if you have more questions about those things, if you'd like to learn more about it, I do make this mention each time Ivan is on. Ivan does our coaching webinars within our trading community on Discord. He does a couple webinars throughout the week going over trade ideas, setups, strategies, and he answers questions that people may have in the audience. So if you guys would like to tune into those, you could join the group, or you can reach out to Ivan or follow him on his own YouTube channel for more information there. The reason I just want to say that now is because, again, Ivan is a very friendly guy. He's very good at coaching people, working with people, and he has that patience that I think a coach needs. So Ivan, I'm bragging on you. But again, people really should hit you up and get access to it.
Yeah, I'm blushing.
Cool. Ivan, I've as just you were getting on, Frank and I were saying, I think pausing for the indices for me right now is kind of what I'm looking to do. NASDAQ kind of broke some levels of support that I was looking at, this support zone. I didn't take any trades because I was looking at gold at the time. granted, I took a loss on gold, so it wouldn't have mattered if I looked at NASDAQ or gold. I took a loss on gold, but I'm also just being patient here, waiting to see if we can get a deeper retracement to key levels of structure. So just to catch up with, I guess, where I'm at with my watch list here this week, I'm waiting for a deeper pullback. And also, as we've discussed here, the Fed meeting on Wednesday is going to move the markets drastically, whether up or down. I am going to kind of just be on the sidelines and only really interested in a new trade if we do get some bigger discounts on the indices. And then the other side of things, as I mentioned here, I am looking to get long gold. And as you mentioned with that dollar concept, gold longs for me right now are kind of gold longs, but they're also more of just a play counter to the dollar. The correlation here is pretty strong. Usually, historically, we see dollar down, gold up, and vice versa. So that's where I'm at in terms of trade setups. Do you have any thoughts on gold, Ivan?
You're running fast there, though, but the S&P 500 and NASDAQ were said we're going to come down a bit. It hasn't come down as much as we want to. So I'm just wondering why you are flustered, because this is kind of what we've been waiting for, either this one or 4460. So yes, you can say that you're pausing, but by any means and any chance, we haven't really got what we wanted. So as I still see this bullish, even though it comes a bit lower, but hey, we haven't made a new lower low yet. So
to your point there on the NASDAQ, it is, so I was pulling up the NASDAQ, but to your point on S&P, I think I have that same level drawn as you, where I would potentially be interested in picking up SPY. But just watching the COT reports recently, there has been a really big preference overall to the NASDAQ. So I've kind of been looking to trade that. And I also am just not going to be in a rush to take trades ahead of the Fed news. So that's kind of where I'm at. But on the SPY, I've got the same level drawn up there. I do think that zone up top still is reasonably bullish. This is a strong, move up. Dollar weakness should help out here. But again, I guess perhaps that second zone that you've got would be trade idea number 2. So if the first one doesn't work out, I'd potentially be interested in a second one in that area. So that's where I'm at. So what do you think, Ivan? Do you trade the indices ever, or do you stick to mostly to currency pairs?
I do the boring every month, but I have been starting to pick up what you guys do. Not because I am not clever enough, but I'm just not bothered. Because I feel like this is going to go up forever. So I'm like, okay, am I gonna buy today, or am I gonna wait a week? So yeah, I do. I'm starting to do, but I don't have okay. So the price action right now, it has come a bit down. Okay, am I gonna buy it now, or am I gonna wait for 44.60? For me, it's so boring because it doesn't go up or down a lot. And to be honest, we don't really have a big fall yet, so it doesn't really trigger any emotions in me, because this is just it's just a tortoise or whatever you call it. It just goes, and it's just there. So I do enough.
I will say also there's a big barrier to trading indices for a lot of people, just because the way forex brokerages, the contract size that CFDs typically use on forex brokerages are huge. So when you trade the futures market, or you trade what I do, which is essentially stock ETFs, because of regulatory issues in the United States, I can't trade CFDs on any regulated brokers. But I will say it makes a world of a difference when you can actually use a proper size. Whereas a lot of forex brokers, a lot of people don't like the indices, because when they try and trade US 30, which is trading the Dow is actually, it's weird to say, it's actually a very calm index compared to the NASDAQ. But futures contracts are very different, or ETFs are very different than trading on a forex broker, which gives you this ginormous size, even at a 0.01 lot size. So you got to be very careful with indices if you're trading them on forex brokers. But yeah, that's just a little bit of a tip for people who are interested in learning on the indices. Please test it on a demo, because the sizing is very big if you're using an FX broker. So just a little bit of a fair warning.
Can I just say what I'm thinking? When I see this, I see that. I see when we are high here, I'm like, okay, I anticipate in my brain, I am thinking, when are we getting that? When are we getting this? And then my brain clicks into, okay, so how would the reversal look like? Okay, this is a very perfect reversal. There's a very interesting buy there, and then this one is very much difficult to trade. But then this is what I dream about seeing when I'm up there. When I see that, that's when I start expecting this reversal, and then in the end, went higher. So just in like an insight into my brain of what I would like to see, and because it's kind of like difficult to like, okay, we have a high here, and so what? We wanted to come back, but how does it actually look like, and how does it actually feel like? Because I feel like real trading, and like we are here now, we don't really know what's going on, is kind of, this is how I simplify it, is go back and have a very clear thing of what you want to see, and you've seen it many times, and you have to see it many times again to trade it. But about gold, you asked about earlier. Yes, I'm bullish on it. I can definitely see myself buying it, but I don't like that candle, short-term wise, because I feel like this is a great level. This is a higher low. So I don't want this to break. It can, of course, break it, but I definitely now need a new higher high break of that one for even, because to still have the confidence that this one is going to go higher, short term wise. So good this morning, but now I'm like, I don't know.
Yeah, that's fair. If it breaks that structure that it's currently sitting at, my stop is just it's a little bit underneath, but again, I'm kind of with you. If that breaks, that's going to be no interest for me. Also, Ivan, I wanted to just follow you on that US 30 for a second. Look at this. So I just thought this was kind of interesting. You mentioned, keeping it really simple. You mentioned the way your brain works with this stuff. Keep it really, really simple on these indices, because look at what happens here. So I just drew a line here from the swing high that you pointed out to the swing low. I just copied it and dragged it over here, and look how beautifully exact, pretty much, this pullback was. This is what many traders would call sort of that measured move. So if we do start to top out, there's your zone, right? There's your pullback. Now, of course, is it going to work out perfectly like that every time? No. But again, keeping things really simple, as you were just pointing out, right? Waiting for these moves to occur before trying to look for the next setup is probably a reasonable strategy. You don't want to chase it, but at the same time, you also want to wait for sort of a measured move to occur, some reasonable pullback. So I don't know. I just thought that was an interesting point that you made with these two pullback moves, and just saying, do you want to be the person who's buying towards the end of these moves, or do you want to buy people who are at the end of these moves, like these measured, healthy, calculated pullbacks that indices, gold, most markets typically do when they're trending, right? They have healthy pullbacks before the next round of buying or selling in a downtrend. So I just thought that was an interesting. You guys can always do this. This is a cool study on TradingView. Just grab a trend line, and then you can actually just Command C, Command V, or Control, depending on what if you're on a Mac or Windows, of course. You can just copy and paste these measured moves and experiment with them. It can be very useful. So Ivan, I want to thank you for coming on, and I want to thank you also for your patience with setting up today's stream. We got it done, and of course we got some value in there. Speaking of value, as I mentioned, if you guys do want that coaching that Ivan does offer, his channel will be linked in the chat right now for you guys to go subscribe to Ivan's YouTube channel. Ivan, thank you for coming on, man. Appreciate it.
Thank you very much.
All right. Yep. So Ivan, guys, I don't know if you guys know this. Ivan has been contributing to our show. He is one of the longest running contributors and now part of the A1 trading community. Our values align very closely. That is why we asked him to be a part of our team quite some time ago. And he is he's a wonderful, simple, very down to earth guy. So definitely check out Ivan. Anyways, guys, I mentioned this earlier. We pulled up the COT data. Some of you guys had questions about it. I just want to say, if you guys would like to take a look at this data on your own, please hit us up for a trial of the software. If you would like a tour or a trial, or you'd like to set up a call with one of our representatives, we do have people who can walk you through the software. So if you'd like to schedule a call, that is an option available to you. We're going to drop a link in the chat right now. If you'd like a trial, a tour, or a call, you can set up any of that by clicking this link right here. So if you click this link, it will allow you to apply for a tour or a trial of the software. So if you'd like some more information about this tool that we've built, feel free to use that. Just a little bit of context. We are a small team here in Atlanta, Georgia. There's about 10 of us total that make these shows and software team possible. So we're a software company out of Atlanta, Georgia. If you guys would like to test out our software, we would appreciate you just checking it out and even just giving us some feedback, even if you don't purchase it. We've worked very hard for the last year and a half to build this software that you see on your screen. We're trying to build better tools for traders at home. Kind of our goal really is to build hedge fund level data and give it to the average everyday trader to take advantage of in their trading. So if you'd like access to the tools that we're using on the software, on the streams every day, feel free to click that link, fill out the form, and get some more information. Thank you guys for tuning in to today's show. If you did enjoy, hit that thumbs up button, and we will see you back on the next show. See you guys.
And that concludes today's show. Our goal at A1 Trading is to keep you up to date with the latest market coverage through our daily videos and articles. If you like our content, make sure to subscribe for more. You can get funded today up to $200K with FX2 funding. Use our code A1Trading15 for a special discount. From all of us at A1 Trading, have a great day, and we'll see you next time.